Michael, thank you for that wonderful introduction. A little thing about my partner and associate, Michael Andrews Jr. He is the host of a fabulous talk radio show called About Your Money. About Your Money Radio is a show that airs weekly on the FM dial here in the Sacramento area at 1 p.m. Tuesday afternoon. You can follow the show and listen live from your computers at aboutyourmoneyradio.com. So again, that's Michael Andrews Jr., the host of aboutyourmoneyradio.com. And that was some great information, Michael, and I certainly appreciate that wonderful introduction. So without further ado, let's get started. Commercial finance. Let's define commercial finance. I define it personally as finance for the purpose of business. That can be to acquire a business, so business acquisition, commercial property acquisition, working capital, investment capital, startup, expansion and growth capital, residential property acquisition, anything greater than 4 units. I think the most common perception of commercial finance is number 2 there, commercial property acquisition. So people think it simply applies to when you're going to purchase a commercial property. And commercial finance, I'm here to tell you today, is so much greater than that, so much more than that. There's so many things that fit under the scope and the guise of commercial finance, and we're going to learn about that today. And if you're a business owner out there listening to the webinar, and as you see these bullet points and these explanations, think about your business. Think about the things that can help you in your business, and at any time during the webinar you have a question, please go ahead and key in that question, and we'll be sure to answer your question. And also, think about the needs of your business, what your capital needs may be, and see where there's a fit with the products and services that I'm going to be talking about in my explanation of commercial finance. So there are many faces of commercial finance. There's the institutional side, again, which is probably the most common or probably the most well-known, and that includes commercial finance that derives from or comes from or originates from your major banks, traditional lending. The alternative finance is something we're going to get into, which I think many of our retail merchants and restaurant owners, per se, would be very interested in listening to. So we're going to get to that. It's a different side of the coin of commercial finance. Hard money is often sought after for investors or business owners looking for money in a pinch. It's typically short-term and high interest, but it is part of the part of the commercial finance realm. Private money. Private money is something that we at ERS Nationwide do not do. We certainly have access to and can make referrals in that regard, but private money is investment capital, venture capital, or VC money. Will typically require that you give up some equity in your venture, business, or project. So it is part of one of the faces of commercial finance. So I just definitely wanted to mention it, but that's something that we don't do. So let's start with the traditional side, the conventional side of that coin, that commercial finance coin. Institutional commercial lending from banks, commercial real estate, business acquisition, and these are things that you would the finance products that we would typically fit you with on the traditional or conventional side of commercial finance. So again, commercial real estate, business acquisition, including franchise loans, equipment finance, lines of credit, a business line of credit. Microloans is a great program. A lot of people may be unaware that it's actually an SBA-backed program, Small Business Administration Program. We do SBA 7A, Patriot Express, a special purpose loan for American veterans who are business owners who have a venture and want to be a business owner. The ARC loan, 504, great products. SBA loans have a little bit of a misnomer or misconception, and that is that it's like grant writing, that it can take forever to get the money. Not true entirely. The products that you see represented on the screen are products that are originated at an institutional bank, regular commercial lender. They're simply backed by the SBA, guaranteed to a large part, not 100%, for the lender. So it's a reduced or mitigated risk exposure for the lender. Startup loans, business loans for women and minorities, again, special purpose loans and finance. So what does it take? Commercial finance, processing, and underwriting can be arduous. It can be often misconstrued. There is additional paperwork. Typically, your commercial finance file is going to be a little bit fatter than a residential finance file. However, the processes are surprisingly similar in that you go through submission to processing to underwriting to funding. And the process can be started relatively simply. As complex as you may perceive the total process to be, getting started is fairly simple. We need to run a scenario. So this does not require that we pull credit. We simply need a 2-page commercial loan application in most cases, a 2-page personal financial statement or a business financial statement, and that's it. We do need some bullet point information to begin to detail your scenario or your capital needs story, as I personally call it. So and this can be contained in the body of the email back to us with the attached documents above. So what we're looking for is just some information on the loan, the type of loan you're looking for, the amount of money, what is the end use of the funds or an itemized breakdown for use of funds, and preferred terms. Now, that's not to say you're going to get the terms that you state that you prefer. However, it gives your financial advisor a good guideline to know what it is that you are looking for would be amenable to. So additionally, if your commercial finance need is to secure or acquire real property, there are going to be some additional things that we need. And again, this can be contained just in the body of your email in a bullet point explanation or detail. So just the square footage, just some specs about the building, the age of the property, estimated current value. If it's a commercial property bearing income, then we would certainly love to see a pro forma. That would go a long way in the initial stage of running that scenario. So we submit. So once we submit, typically the lenders, we're looking for the lender to provide a defined letter of interest to pursue your capital loan, your capital finance need. So at that point, we'll come back to you, your CFA or your commercial finance advisor will come back to you looking for the full loan package, which can be, as I said, kind of thick. We're looking for personal financial statement, business financial statement at that point, both of them, tax returns for both the business and the individual guarantor of the loan. So if it's a partnership, a corporation, an LLC, whatever it may be, one of the members of management or the executive body will have to step forward and be the guarantor for the debt. The loan is still made out and the finance is still to the entity or to the company. However, there's got to be a personal guarantor, and when we talk about submitting a loan file for commercial finance, we need that guarantor's information, their bank statements, tax returns, as I said, and then we're going to need the business documents as well, business tax returns for the last 3 years, the full loan submission. You get the point. So that wraps up, if you can say that, the commercial or the conventional side of that commercial coin, if you will. The other side of that coin is very interesting, unique. I love this side of the coin because it really serves a finite, defined purpose, and it really is good product for retailers, merchants, restaurant owners that you would think would not be able to qualify perhaps for conventional finance, or the financial need may be more immediate than a 30, 45, or 60 or 90 day turnaround on the other side of the commercial coin. So alternative finance has a streamlined, simplified application approval process. This is short-term money. This is money that you can get very quickly for a specific purpose or need, as long as you have cash flow into the business, because every one of the products that we highlight here on the alternative side is going to be prefaced on your business's ability to pay, not necessarily the credit worthiness of the individual business owner. So we have lower underwriting guidelines, and I said short term and easy and quick to get, so 3 to 5 business days to get your funds. No fixed term, easy payback structure, and I'll explain that in a moment. Qualification, as I said, is based predominantly on the business revenue and deposits. No bulky monthly debt service, so you're not writing a fat check at the end of the month that can further cripple an already crippled income stream or business. So these are considered advances, not loans. So let me give you an example. Let's say there's a restaurant, and that restaurant has gross earnings of $100,000 per month. Now, stay with me on these numbers. I'll keep it simple in round numbers, but $100,000 a month in total revenue. So let's say of that $100,000, $80,000 comes from credit card processing. Of that 80, let's say $70,000 per month comes from Visa and MasterCard processing only, exclusively. In the alternative side of the commercial finance realm, we can provide that restaurant under a merchant cash advance up to 70, maybe in some cases a little bit more, but I want to say 100% of their Visa and MasterCard processing. So if they're doing $70,000 in MasterCard and Visa exclusive processing, we can get that restaurant $70,000 or up to $70,000 in 3 to 5 business days. I want to say that again. We can get that restaurant, this hypothetical scenario I'm painting for you, we can get that restaurant $70,000 in 3 to 5 business days. That's under the Merchant Cash Advance program. So it factors in your total MasterCard and Visa monthly processing volume. Remember, in our hypothetical restaurant, that number was $70K. So then the second product we highlight is the ACH Advance, or Automated Clearinghouse Advance. This is based on your total monthly sales. So going back to our hypothetical restaurant that does $100K a month, that restaurant, we could get them under the ACH Advance, we can get them up to 70 to 80%, I'll say up to 80% of that total volume in 3 to 5 business days again. The third product we highlight on the alternative finance side is an unsecured business loan. Unsecured because it's not collateralized. There's no collateral, there's no assets pledged. It's again not based on the individual creditworthiness of the business owner, although that is a factor, but a minor one. It's based on the business's volume, your average business volume, I'll say, per month, and it is repaid on a factor formula. So let me break that down. For all three of these products on the alternative finance side, they are, one, based on the business's revenue and the business's ability to pay back the debt. The first two you see on your screen, the MCA and the ACH, are advances, not loans. The third one is in fact a loan, although it's an alternative business loan, so it works a little bit differently. There's no interest rate per se on these products. There is a cost of funds. It's based on a factor. I don't want to get into that too deeply. Please, if you have questions on this, that's what we're here for. Hit us with the questions. Maybe we'll take some questions for you offline as well. You can always email us, and we'll get back to you. We're very responsive in that regard. But I want to cover this on a kind of a topical level today so that I can keep moving. But just to say, suffice to say that the payback, as I said on the previous slide, you saw that there is no fixed term. So the payback is based on a fixed percentage of your daily revenue. So let's say on the MCA product, based on your MasterCard and Visa daily processing, you would have a fixed payback once you got your advance. Let's say, and don't quote me, let's say it was 10%. So that would mean that if you had a $1,000 day in your business and you'd gotten this advance under the MCA product, then you would pay back through an automatic draft through your processing account, $100 that day. If you had a $5,000 day in revenue, then for MasterCard and Visa, then that would be a $500 payback that day. So every day there is a draft from your account based on a fixed percentage of your daily volume in that regard. On the ACH Advance, it's going to be from your business checking account because that factors in your total. It's going to be an ACH draft from your business checking because that factors in your total revenue. Cash, checks, Visa, MasterCard, Amex, Discover, whatever it may be. On the unsecured business loan, it works the same way in terms of a draft daily from your business checking account. So that's why you can see that would be why there's no fixed term, because of the volatility or the fluctuation of the payback being a daily factor of your daily revenue. There's no fixed term on any of these products, but typically you can get these products for up to 12 months. That's going to be pretty typical. The great thing is, especially on the 2 advances, once you've paid back through that daily draft, approximately 60% of what was advanced to you, you can renew very easily, very simple, and you can get the money deposited automatically into your account. So great products. So with as with every good thing, there are some restrictions, of course. Naturally, there's going to be some things that are going to be regulated or restricted or governing the use of these products, the extension of this type of credit to you as a business owner. So there are going to be some minimums. For example, on the MCA product, you need to have a benchmark minimum sales volume, again, from your MasterCard and Visa processing exclusively of about $5,000 to $10,000 before you can really qualify for that type of product. On the ACH advance, interestingly enough, that's the one that considers your total volume. That minimum threshold is around $20,000 per month. And this is not an average. It should be a consistent flow of revenue in that amount. So 2 or 3 months of $20,000 volume would suffice. There is a restricted business list. Interestingly enough, we are a real estate and finance company, and we could not qualify for this type of product on the alternative side. Real estate operations, real estate agents, insurance operations, finance operations, banks, check cashing places, adult entertainment, all on the restricted business list. It's a short list. Given the possibilities out there, there's 19, I believe 16 to 19 businesses on the restricted business list on the alternative side. And these are just businesses that funders deem too risky in terms of their risk mitigation formula, inconsistent income or predominantly cash income. Those types of businesses are going to be prohibited or restricted. Other than that, though, there are lots of worthy, great candidates for this product. On the MCA process, as I've been saying, American Express and Discover cannot factor in for MCA product. Only your Visa and MasterCard can qualify you in that regard. So the business must have been up and processing credit cards for at least 60 days. No open bank accounts, bankruptcies or liens against your business should be current on your lease. And if you own the property, should be current on that mortgage for that location. So we talked a little bit about this. I think restaurants are probably the best suited target consumer for this product, for this advanced, the alternative advanced product. Hotels are great candidates. Construction company owners, builders, contractors. Interestingly enough, a lot of contractors are using this money as these types of alternative products as bridge money to bridge between their phases of their project finance. Basically, any business that you would be able to drive up and down the street anywhere USA and drive into a strip center. And I would say if you did that, I would say 8 out of 10 businesses in any strip center USA would probably be great candidates for this. So if you are listening today and you are a retailer, you are a merchant, business owner, a restaurant owner, hotel, construction, anything like that in a strip or retail center, this is great finance product for you. And I would encourage you to inquire with us today about how we can help fit you with one of these alternative products if you need capital and you need money in a pinch. I mean, typically we're talking about businesses trying to meet their utilities cost, their lease expense, their monthly fixed and variable expenses, payroll even. I mean, if you have a bad month and you're a retail merchant, your utilities, your fixed expenses do not change. Payroll is what it is. The cost is what it is to keep the lights on, to keep the gas going. So those things don't change given the kind of month you may have had. If let's say there's a public works project right outside of your strip center or at the main point of egress to your strip center, that can hurt your business. Let's say that project is 3 weeks long. They're repairing the road or a gas line or a water main or whatever it may be. That can cause serious detriment and a declination in your business revenue for that month. So what do? Well, this type of product can help serve you in that regard very well. So that's all I've got for you today. I thank you for attending the webinar. This has been a presentation by ERS nationwide. We are a California finance lender. Please feel free, as I said, to contact us and hit us with any of your questions. We love to get inquiries from our listeners and attendees for these webinars, and we're easy to contact. If you have any questions with regard to any of the commercial finance products, whether they be the conventional side or the alternative side of that coin as I described it, then please do not hesitate to contact us. If you are a business owner and you are in need of finance, whether it be working capital, investment capital, startup capital, expansion capital, whatever you may need, money in a pinch to keep the lights on or make payroll this month or next month, let us know, contact us. We certainly can help, and we want to help you. So again, thank you all for your attendance, and we look forward to hearing from you. Have a wonderful, productive, prosperous day.